Another muted start to the week as the Nifty now sulks below the 25,600 mark, while broader indices also remain in the negative territory. Most sectoral indices see some pressure, especially auto and real estate stocks on the back of Q3 updates. Metals and FMCG hold on to gains.
Lemon Tree is soaring after it approved the demerger of Fleur Hotels to create two focused platforms. Warburg Pincus will acquire APG's stake and invest 960 crores in Fleur, which will list as a separate entity within 12 to 15 months.
Avenue Supermart is also upbeat on the back of strong profitability, with profit jumping nearly 18% and EBITDA margins expanding sharply. Store additions picked up, cost stabilized, and management sees faster expansion as the key growth lever.
Signature Global under pressure after a pre-sales fall 27%, and the company flags it may miss FY26 sales guidance. In contrast, Phoenix Mills posted a strong Q3 momentum led by scaling malls and robust leasing activity. Asiana Housing slipped despite healthy unit bookings.
Shares of several newly listed and unlisted names slipped as lock-in soap-in stocks, including Wakefit, Pura Remedies, Travel Food, Rubicon, Emcure, and Canara Robeco AMC saw a mild decline, reflecting near-term supply pressure.
Hello and welcome. You tune into Buy Now, Sell Now. I'm Ankita Saxena, and with me is Kavita Thaplyal. In the next 1 hour, we'll take all your questions, all your stock-specific queries, and get them answered by our experts. The number is flashing on top of your screens. Please don't forget to write to us. We will keep taking your questions through the show. But first up, let's take stock of how the market is shaping up at this juncture. Now, it's a quiet day. It's a weekday of markets coming in. In fact, if you look at Nifty is below 25,550. We have broken below that level as well. We are hovering around the lowest point of the day on the Nifty. 137 points, 0.5% cut is what we see on the Nifty. As far as Nifty Bank is concerned, even Nifty Bank has slipped into the red. In fact, that is also not doing much. It is trading with cuts of 200 odd points on Nifty Bank as well. It is the broader end of the market that is seeing sharper cuts. In fact, if you pull up the charts for Nifty Mid Cap, that's down 0.8%, and small caps, that is hammered away in trade with cuts of 1% in trade. In fact, if you look at most of the constituents as far as small caps are concerned, that is trading in the red. But sectorally also, it is just the metals that are holding on to a bit of a shine in the trade, and FMCG, which is very, very flat, though in the green, but very flat. But besides metal, all the other sectoral indices are trading in the red, with Nifty Media taking the sharpest knock, trading down 2% in the trade. Nifty Realty, Auto, Nifty Pharma, all of these are trading with cuts of 1 odd percent. But let's take a look at some of the buzzers in the trading session. We do have the defense pack that is also reeling under pressure. BEL, Cochin Shipyard, Mascot Dock, that basket is reeling under pressure. Besides that, we have Tejas Network that's down 7% after reporting a loss in Q3 of FY26. But what's doing well today is Avenue Supermarts. Avenue Supermarts has reported a rather strong set of results. On the back of that, that is up in a way 2.5%. We also have Signature Global that is in focus. Asiana Housing that's under pressure after reporting a weak Q3 business updates. We also have TCS that will be coming out with its results today, so that will kickstart the big earnings season. So we are watching out for that. But as of now, India VIX is another thing that is important to watch out for, because that is very volatile. That's shot up 6.5%, and therefore the volatility in the market, advanced decline ratio, clearly tilted in the favor of declines. Kavita.
Absolutely, and with this sell-off intensifying and deepening, we've already seen almost 17 lakh crore of market value also being erased, and definitely investors are grappling with a fresh uncertainty at home and abroad. But then let's move on, and a few important updates. The new United States ambassador to India, Sergio Gore, is in India amid trade friction and strategic unease between New Delhi and Washington. Now, Gore is expected to play a key role in restoring trust, advancing defense and Indo-Pacific cooperation, and pushing progress on a stalled trade deal. Sumita Karir, our colleague, joins us with more details on this. Sumita, take away.
After he arrived, Gore struck a positive note in a social media post and stated that incredible opportunities lie ahead for both our countries. Now, remember in September as well, in September 2025, during Gore's testimony, he also emphasized that India is one of the most important relationships that the United States has in the world. And that is something that has been reiterated by U.S. Secretary of State Marco Rubio as well. Now, his arrival follows President Trump's approval on Thursday of a bill which allows for tariffs of at least 500% on countries that are importing Russian oil. And this is where Gore's role comes in, because he is known to be a key member of President Donald Trump's inner circle. So with his deputation here, Gore is all set to work towards restoring trust between the two sides. There is also hope that communication between New Delhi and Washington, D.C. will be smoother. Now, he will also be looking at some of the concerns that both the sides have. Definitely on the trade deal front, but definitely on US's closeness with Pakistan as well and how it plans to navigate its ties with India. He also has an expanded role as far as Southeast Asia is concerned. But let's talk about the trade deal aspect, because there has been different commentary that's coming from the US administration. On the one side, some officials stating that India has given the best deal, and then Mr. Lutnick stated last week that the deal did not happen because the Prime Minister did not call. So it all remains to be seen whether Donald Trump is all set to give Sergio Gore an early win. That is going to be definitely a key priority for Gore, but he could also be looking at facilitating Donald Trump's India visit for the Quad Summit. And of course, last but not the least, he will be focusing on bilateral cooperation between the United States and India on defense, energy, and trade domains.
And well, German Chancellor Friedrich Merz is also on a two-day India visit. His first Asia trip since taking the office ahead of the India EU summit. Merz met Prime Minister Narendra Modi today and will visit Sabarmati Ashram as well. Talks will focus on defense, trade, renewable energy, mobility and support for Ukraine. My colleague Sumita is joining us yet again with the agenda for this.
That's right. German Chancellor Friedrich Merz is on an India visit. This is not just his first visit to India, but to Asia as well after he assumed office in May 2025. This visit is coming ahead of the India-EU summit. And before this visit of Friedrich Merz, Indian and German leaders both met on the sidelines of the G7 summit in Kanamskis in Canada. And today he's expected to meet with the Prime Minister. He is in India already. He's also scheduled to visit Sabarmati Ashram. And the leader then will be visiting Bosch's facility in Bengaluru. In Bengaluru as well, he will be visiting Nanoscience and Engineering, CNSE as well. Now, remember, this is happening at a time when European capitals have shown interest in engagement with India. India has also stepped up engagement with European capitals as ties with the United States have become unpredictable. And this at a time when both the sides, EU and India, are also negotiating a trade deal. So what's really on the agenda of the German leader's visit? Well, both the Prime Minister Narendra Modi and the German leader, they are expected to take stock of bilateral ties. Defense and security is going to be a key highlight of these conversations, as both the sides are working out details of a submarine manufacturing deal. And this deal could include tech transfer for submarine production. Now, why is this being talked about? Why is there a lot of expectation around talks related to defense is because India's defense secretary and German ambassador to India, Philip Ackerman, discussed co-development and co-production of defense equipment. There's also going to be talks around education, mobility, renewable energy, trade investments, and of course on the India-EU FTA talks as well. So overall, this seems like a packed month for Indian diplomacy. Not only did the Commerce and Industry Minister Piyush Goyal visit Brussels last week, but the External Affairs Minister Dr. S. Shankar also visited France and Luxembourg. And then we are expecting the visit of EU Commission Chief Ursula von der Leyen in late January. And President Macron, French President Emmanuel Macron, is all set to also visit India for the AI summit in February.
Right, Sumita, thank you so much for all those updates. And yes, we'll be taking updates from you regularly. But then let's move on and let's begin today's edition of Buy Now, Sell Now. We are joined by both of our guests, Jigar Patel and Gaurang Shah, live with us. Hi, morning and welcome to the show. Let's take a tech check on the charts. And Jigar, not a great start for the week. How are you looking at the market, technically placed? What is the new support level now?
Very good morning, everyone. See, currently Nifty, if we look at the all-time high levels, we are currently down by almost 3 or more than 3%, and even below trading is seeing around below 100-day daily exponential moving average. So currently, the next support level is expected near 25,500, followed by 25,450, and overall, this level aligns with previous breakout zone of 17 September 2025. So I expect that at least market should halt at this particular level and see some sideways move for at least 2-3 days. And after that, we may see some short-term bounce till 26,000 approximately in Nifty. Whereas in Bank Nifty, again, the kind of action we are seeing, almost Bank Nifty is even down around 3% from the all-time high. But overall, the averages which are as of maintain is 50 daily exponential moving average, and currently placed exactly near that particular level. So we expect that the base or the support is seen near 58,800, followed by 58,700, 600 odd levels. So at least Bank Nifty should halt at this particular level, 58,800, 900 zone, and later on we may see a short-term bounce till 59,500, 600 odd levels.
All right, thank you for those levels, Jigar. We will be watching out for that. But now let's get started with the show, and we have our first caller for the day. We have Lalita Ramesh who's joining us from Bangalore. Hi, Lalita. Good morning. Thank you so much for calling us today. Tell us, what's your question?
Good morning to all, ma'am. Happy New Year to all ETV staff. And I have a query regarding JM Financial. I purchased 160 shares of JM Financial 2 years ago at 82 rupees per share. Now I am sitting on profit of 8.75k. Now what should I do? Shall I continue to hold or book partial profit or hold? Kindly suggest me, ma'am.
All right. Thank you so much for your question, Lalita. First, let me come to you, Gaurang. She's clearly sitting on a profit, but if you take a 1-year time horizon for JM Financials, on the fundamentals, do you see there could perhaps be an up move? Lalita, what's your time frame though? Are you willing to hold it on?
Horizon, madam.
Are you willing to hold on to the stock? What is your time horizon?
3 to 6 months.
3 to 6 months. Okay, so I guess Jigar is better placed to answer that question. Then on the technicals, Jigar, how does JM Financial look to you? She's already sitting at a profit. Should she book her partial profit? Do you see a further up move? What should she do?
See, currently JM Financial is about to break the critical level of 134. So I would suggest a stop loss of around 134. If JM Financial is closing below 134, then partial profit can be booked at this particular level, 134, 133. And overall, again, she can re-enter around 120, 122 mark if JM Financial tests this level within next 1 to 2 months.
All right, so that's the target for which you can be in the stock. But then with that, it's time for a short break, and post that we'll be talking to IREDA's management live on the back of the Q3 results. You stay tuned and keep sending us your questions on Buy Now, Sell Now.
Welcome back. You're tuned in to Buy Now, Sell Now. It's a show where we get all your questions answered. But before we resume with the show, we do have a management joining in. Now, remember, we have started with the earnings season, and IREDA has reported its Q3 numbers. In fact, IREDA was up in a way 4%. It has given up those morning gains, but nonetheless holding on to a shade of green with gains of 1.2%. On the back of strong set of results coming in, we do see a PAT jump up of 37% on a year-on-year basis. In fact, the strong revenue of 25% on a year-on-year basis at 2,130 crores. We also have the gross NPA that has come in at 3.7% on a quarter-on-quarter basis, and a net NPA that stands at 1.68% on a quarter-on-quarter basis. But now we are joined by the management to weigh in on the numbers. Pradeep Kumar Das, who is the CMD IREDA, is joining us. Hi, good morning, Pradeep. Thank you so much for taking the time out and joining us. Pradeep, firstly, we do see a good set of numbers that IREDA has posted. We see a 38% year-on-year growth in your profits. That's backed by strong, revenue performance as well, and strong operating profits as well. What were the levers of growth? Firstly, what has led to this performance?
Very good morning. Thank you. First of all, the growth momentum is there quite steady since 25 quarters, not just 1 quarter or 2 quarters. Only the provisioning and NPA issues, which will become alarming in last June quarter. And we all know that that is largely because of Gensel and another group of entities. And if you see in the country, the RE is growing at a CAGR of 22.6%. And our loan book is growing at 28% of CAGR, almost 27-28% last 5 years. If you see 28% also, year-to-year growth is there. And as far as profitability is concerned, we have improvised our provisioning coverage this time, and which generally used to be around 44, 45, and now almost 56% stage. And probably we are going to move safe in 9 months, another 3 months are ahead of us. Generally, the kind of disbursement what we do in 9 months, almost similar figure we do in last 3 months, than the last quarter of the FY. And as I said, 22.6% CAGR growth of RE is happening in the country. And in particular, 49.12 gigawatt of RE has been added in 2025. And in the beginning of 25, it was our ministry which has announced that they'll ensure or attempt to make at least 50 gigawatt of capacity addition in the country. And through bidding and other modes, whatever is there. And finally, if you see that throughout the year, the market could have had some ups and downs in the review, but finally, 49.12 gigawatt is quite encouraging figure. That too, when the government has said in the beginning that we'll make 50 gigawatt. And we have to have 485 gigawatt of RE by 2030. And that we can achieve by financing till 2028 or 29. Certainly not by 2030. So organizations like us need to have much more CAGR of growth than what India's growth is there. And we being the largest pure play green finance company in the country, almost working since 38 years, and almost single-handedly financed for 27, 28 years. At 10, 11 years, others have come into this. And if you see our loan portfolio, almost 88,000 crores, out of which 50% is coming vanilla, 75% is coming vanilla, and 25% is coming from new and emerging area, which is our forte. Because in this 75%, there is cutthroat competition. Very thin margin of NIM will be there.
Right.
But still able to sustain 3.74 NIM, which is gradually improvising. If you see last 4-5 quarters, it is gradually improvising. And cost of borrowing is also going down gradually.
Definitely. Morning, Mr. Das. This is Kavita also joining in. Now, I just want to shift your focus on the NPA numbers. So, gross and net NPA have fallen quarter on quarter. H1 NPAs have risen slightly. What's the rationale behind it that you might want to give?
See, you see, cumulatively in 9 months, we have recovered almost 238 crores from NPA. And in this quarter itself, 150 crore recovery has been made from NPA. So, and I always say, if at all you will be looking at our total cumulative financing of almost 180 crore in last 38 years, against which cumulative write-up was 405. Against that write-up, the write-up in essence, bad debt. Out of that 256 we have already recovered, and net write-up, which to be a concern to the investor or to the management, that it's only 149. And if you take 149 out of 1,80,000 crore, it is coming to 0.08. So therefore, the NPA in RE should not happen if the developer as well as the lender is having a perfect disciplined approach of growing. And that IREDA has established in last 38 years. And particularly last 5 years, if you see, we have recovered almost 154 crores out of the bad debt. And in last quarter itself, 24 crore we have recovered from the bad debt. So our bad debt recovery, and when we are recovering, I'm saying that is the write-off from the bad debt we are recovered. That means it is not restructuring or rescheduling. NPA can be reduced by restructuring or rescheduling or by recovering.
Right.
And most of our NPA reduction has been through recovery. And while recovering, we have not gone for write-off.
Right, Mr. Kumar, you had also mentioned, the provisioning in the GNPAs have been under pressure, because of the entire Gensol engineering exposure. Is that now a thing of the past?
It is gradually becoming thing of past because April the matter was blown up, and in the IBC history of India, first time any application is admitted in NCLT, that is by IREDA, 29 days only. So that speaks the volume that how proactive and meticulous we are in while approaching for the recovery matters. RP got appointed and then RP started working. Our team as well as mind it is not sole lender IREDA. Had it been sole lender, probably the speed of recovery would have been much better. We noticed that 16 lenders were there in that space. And so far, the interim report of SEBI or internal investigation of IREDA and others, what we have noticed, all the RP's input, what so far we have received, largely it is appearing to be the promoters' indisciplined approach and misgovernance. But we are waiting for the final report. We have also engaged a forensic auditor for that. But most important thing that majority of the vehicles have been traced and some of the vehicles started rerunning. So that is what the RP's output in last couple of months. And in the time to come, because there were a combination of two assets. One was e-mobility, other one was EPC contracts, for which in the solar space they were doing.
Right.
So some semi-finished, some were under progress. So those they are trying to complete. And I'm sure another by 3 to 4 months down the line, we'll be in a much better position to know. It may happen some minor debt would be there, but it is not that was envisaged in the initial stage. But most important, the governance of IREDA was in question not by the media or analysts or the regulators, all the agencies. We have established and we have proven that the governance of IREDA is not in that weak front. And as a matter of fact, apart from that, also in the other NPA, we have already recovered 150. And in the time to come, we'll be ensuring that. And one point I would like to inform, we're the only NBFC or bank in the country who is reporting the result fastest, and the only company who is reporting the loan book in the end of the period. That is the 31st December, we have reported our provisional loan book.
Right.
Never ever in banking history in India, no company has done it.
Absolutely, absolutely. Thank you so much, Mr. Das, for joining in today and talking more on the results, and all the best. Thank you so much for joining in today. And with that, it's time for a short break on this edition of Buy Now, Sell Now. But then post that, we'll get a tech check on IREDA through Jigar also. But then a short break, and then let's focus on your stock-specific queries.
SEBI Chair Tuhin Pandey said that the market regulator could grant a no objection certificate for NSE's listing within a month. On derivatives, he said that SEBI continues to closely monitor FNO data and will wait for clearer evidence before issuing any consultation paper.
And it's Newsmail confirmed union budget will be presented on February 1st by Finance Minister Nirmala Sitharaman. Parliamentary Affairs Minister Kiran Rijiju has said the session will commence on 28th January and continue till 2nd April.
Retail inflation for December is expected to edge up to around 1.5% on year-on-year basis, marking the second straight monthly increase, led by a broad pickup in the food prices. Core inflation is also seen rising, partly due to the higher gold prices. December will also be the last CPI print under the 2012 base year.
At the Vibrant Gujarat Summit, Prime Minister Narendra Modi said the focus is on attracting global investment that benefits India, calling the summit a strong example of inclusive growth and global cooperation. Industry leaders echoed that confidence, with Reliance committing 7 lakh crore to Gujarat, while the Adani Group highlighted Gujarat's role as the backbone of India's industrial and manufacturing ambitions.
Welcome back. You're tuning to Buy Now, Sell Now with me, Ankita, and with me, Kavita. And our guests, of course, are there to get all your stock-specific questions answered. Now, remember, the number is flashing on the screen right now. You can keep writing to us, and we'll get them answered by our experts. So let's resume with all the questions that you have been sending to us. Now, this one's coming from Manju. Manju is writing from Pune. Manju says that they are invested in the defense stock, PSU, and automobiles. There are a couple of names that they have given. BEL shares at an average buying price of 356. SBI had a buying price of 744. And Tata Motors passenger vehicle at a buying price of 428 rupees. Would like to know if at what price can she buy more, and the target price for a long-term investor. Okay, let me come to you, Gaurang, for this one. A couple of names there then: BEL, SBI, and Tata Motors. What's your take for, say, a time horizon for the next 1 year?
Well, first of all, a small disclosure that all these recommendations that I'll be sharing this morning on your show are a part of our research team, fundamental research team recommendations from a long-term point of view. Our company, Jurjit or I, we do not have any kind of personal investments in any of the recommendations that I'll be giving today. No financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest. So I think, first of all, on two names that you mentioned, Bharat Electronics as well as State Bank of India, we have a positive coverage from a long-term point of view. On Tata Motors, post the division into two, Tata Motors PV and Tata Motors CV, both these stocks are under review, so I won't be commenting since they are under review. But earlier we had a long-term buy call on Tata Motors combined entity. At what levels to average? Unfortunately, I'm not qualified, but I think these kind of corrections in the market should excite you to add to your fundamental strong stocks that you hold in your portfolio from a long-term point of view. So if you ask me, you can average at current levels, some and possibly on dips, you can go on adding BEL and State Bank of India. And our sense is that defense and entire BFSI segment, that is public sector banks, private sector banks, and strong NBFCs, will deliver strong numbers not only for the third quarter, but for many quarters to come by.
All right, let's take one more women viewer query, and this is coming in from Malti. She's from Bangalore. And Gaurang, I'll once again come to you. She wants to know about CEAT. 50 shares of CEAT bought at 165. She's been holding since 15 years now, and she wants to hold it for some more time. And there's also IDFC. She's bought 50 shares of IDFC at 173 per share and got 70 shares as bonus. And she's been holding this since last 10 years. And okay, so what should be her strategy now? I mean, I'm not sure about any profit booking that really needs to be done in case she needs money. But having said that, hats off to her patience, I must just say that.
Absolutely, Kavita, hats off. And this is what exactly a perfect example of investors getting invested in a stock and holding it from a long-term point of view. Look at the kind of returns that you're getting in your investment. So firstly, on CEAT, of course, some time back we had coverage, our targets were in place, so we have not continued with any kind of coverage on CEAT. But let me say this for the benefit so that she can have a little bit of more clarity. So, we are of the opinion that auto sector is also going to do quite well in terms of future performance. Now, if auto sector is going to do well, tire manufacturing companies, OEM segment companies, and battery manufacturing companies will also do well because they actually contribute to making a safe vehicle. And tire is one of the most important components in a vehicle, whether it is two-wheeler, whether it is three-wheeler, four-wheeler, commercial vehicle, EV, or fossil fuel-driven vehicles. And CEAT has got a decent presence as far as Indian markets are concerned, and even a little bit of export as well. So it's a strong company with great balance sheet. On IDFC First Bank, if I heard that right, Kavita, we have a positive call on IDFC First Bank. We have a positive coverage. Look, booking profit, it is totally dependent on investors' individuality. How much return they want to make, what is the risk appetite, and what is the time horizon. And the way, Kavita, investing is an art in a stock market. Similarly, booking profit is also an art in the stock market. So I leave it to the wisdom of the viewer. If you are not in need of money, continue to hold IDFC First Bank. And CEAT happens to be one of the strongest contenders in the tire manufacturing category.
All right, hold on to IDFC first. That's the call coming in by Gaurang. But now we have a live caller joining us. Khurshid is joining us from Delhi. Hi, good morning, Khurshid. Khurshid, tell us, what's your question?
Yeah, good morning and happy 2026 to all of you and the expert panelists. Okay, so my question is actually I don't have the green energy counters yet on my portfolio, and I want to add the green energy counters now. So Suzlon was one that I had kind of shortlisted based on its fundamentals, etc. So I want the view of your experts, whether Suzlon or anything else that is promising. And I'm looking at mid to long term time horizon.
All right, mid to long term time horizon. Gaurang, I will have to come to you for this one. He's picked up Suzlon. Any other suggestion that you would like to give? Because if I look at Suzlon has really, not done anything. In fact, it has been in a corrective phase for more than a year now. In fact, last 6 months, it's eroded almost 27% of investor wealth. Where do you see this stock headed? Is it a good bet? And what would be your pick if you had to give a choice in the energy sector?
Well, thank you so much, Mr. Khurshid. Please accept New Year wishes from our side to you and to your family. And may health shine upon you and wealth gets always delivered to your investments. So on Suzlon, as identified by Mr. Khurshid, we have a buy recommendation on Suzlon. But let me say this, that Suzlon happens to be a little bit of high beta stock given the kind of volatility. It used to be, or rather it is still a short-term trader's favorite, and because of the volatility that the stock throws at you. But from a long-term point of view, and long-term, Mr. Khurshid, by definition, is not 6 months, 9 months, 1.5 year plus for a clean green energy stock if you're really looking to get invested in. Second one is Wari Energy. Third one is Tata Power, Mr. Khurshid. Tata Power is into both hydro, thermal, as well as wind and solar. Not so much of wind, but more of solar. And they have launched some new products in solar panels as well. And house-to-house roof solar equipments are being installed, and a great market share for Tata Power. So we have positive coverage on all these stocks, Tata Power, Suzlon, as well as Wari Energy. It is not Wari, please correct the slide that you are just showing. So it's Wari Energy. So these three, but like I mentioned, it is not from 6 months, 9 months, 1 year. 1.5 to 2 years plus should be the time horizon.
All right, so definitely with the right time horizon, you've been recommended the right targets also. But then with that, it's time for a short break, and post that we'll continue answering your stock-specific queries.
Welcome back. You tune in to Buy Now, Sell Now, where we're getting all your stock-specific questions answered. Keep sending in your questions. The number is flashing on top of your screens, and we'll get them answered by experts Gaurang and Jigar, who have joined us. So let's resume with all your questions that you have been sending us. This is Ayush who's writing in. He says he wants to get into ITC. Is this the right time to buy, or should he wait for some more time? Jigar, let me come to you for the right levels to get into, because ITC has seen a sharp blowout. In fact, in the last 1 month, it's down almost 16%. The tax overhang is still, looming over the stock. Brokerages have also downgraded ITC. But at this level, do you see further downside, or can he start getting into the counter now?
See, first of all, for ITC, trading has been completely, I would say, he should avoid, because the kind of price action we saw last week, almost thus 390, a very critical support was taken out, and currently we are trading near 336. So if we look at the long-term chart, the 50% retracement right from the COVID low till September 2024 high, which comes around 335, 330 zone. So I would suggest him to try to accumulate between 340, 325 odd zone for at least 1 to 1.5 year kind of time frame, and keep a stop loss of below 300 on closing basis. And overall bounce is expected till 420, 425 level within next 6 to 8 months.
All right, that's the recommendation coming in on ITC. Gaurang, this question is from Mr. Satya from Hyderabad, and he's holding Tata PV 200 shares at 365 since the last 1 year. He's a long-term investor, but now he also wants to shift this investment to Tata CV at this point in time. Whether the shift makes sense, is it a better investment choice? Is what is his question? Again, long-term, both.
Kavita, I missed the first part of your question. I believe she's got the investment in Tata Steel and she wants to move it to Tata Motors CVA. Did I?
Tata PV
Sorry.
wants to move to Tata CV. Satya from Hyderabad.
So like I mentioned, Kavita, we had coverage on Tata Motors before the split into two, that is Tata Motor PV and Tata Motor CV. I won't be in a position to give a straight off switch from Tata Motors PV to Tata Motors CV since, like I mentioned, both these stocks are under review post the split into two. I'll give a brief about the business. The recent month-on-month numbers, Kavita, were extremely strong as far as the commercial vehicle segment is concerned. So for Tata Motors CV, Ashok Leyland, Eicher Motors, the numbers are very, very strong. And the view is that going forward, this segment, that is the commercial vehicle segment, related companies are likely to perform well. With that view in mind, we have coverage on other CV manufacturing companies like Ashok Leyland and Mahindra, including Eicher Motors, because they also have, along with RE, that is Royal Enfield, they have Eicher commercial vehicle segment, and they have a JV with Volvo as well. But Tata Motor CV is likely to perform well given the outlook of offtake of commercial vehicles month on month, and that will translate into a positivity as far as the balance sheet is concerned. So it's a strong contender in the CVs category, Tata Motor CV. Unfortunately, since it is under review, I will not be in a position to give a specific shift from Tata Motor PV to CV.
Sure. Jigar, any specific advice?
See, in terms of Tata Motors commercial vehicles, I would suggest to, as of now, hold, because the kind of structure we are witnessing on hourly chart, there has been a minor pullback, but there is a strong demand zone near 400, 410 level. So I would suggest to add more at this particular level and keep a stop loss of below 380. And overall, again, the upside is seen till 450, 460 for next 3 to 4 months.
All right, so that's the view coming in on Tata Motors commercial vehicles. But let's get on to the next question. This question is coming in from, let's take this question. This is coming in from Chennai. This is, okay, they have not given their name, so we will not be able to take their question because there is no name. We'll move on to the next question then. This one's coming in from Vijay Kumar, who says he's writing in from Hyderabad. He says he wants to know the prospects for Symphony. Gaurang, he wants to know the prospects for Symphony. He's not given his buying price or the holding period, but say for a 1 year period, what would be your view on Symphony?
So, Symphony happens to be a company which is into various kinds of electrical peripherals and consumer durable appliances. Normally during winters, the offtake of coolers, etc., is not that high, and coolers happens to be one of the frontline product for Symphony. North India happens to be a big market for this particular company, Symphony. We are approaching summer season as we go forward. We have accumulate stance on Symphony from a long-term point of view. My only advice is that at current levels, don't put all your investable capital at one time. Maybe 20, 30, 40% or more, depending upon your risk appetite, you can deploy at current levels. And on dips, you can definitely add on to it. But yes, we have a positive coverage on Symphony.
All right. Any technical recommendation for short-term, Jigar?
See, currently Symphony is trading near 880, which is a historical support right from July 2020. Approximate levels are 840, and currently we are trading at 880. So I would ask him to, try to accumulate in a staggered manner in the zone of 880 till 800 zone, and keep a stop loss of below 750, which is almost the low of March 2020. That is the COVID low. And overall, based on weekly chart, there has been a bullish crossover on MACD. So there is a chance that we might see a short-term bounce till 1100, 1200 levels within the next 8 to 10 months.
All right, so that's the view coming in on Symphony. That was the last question of the day. Jigar and Gaurang, thank you so much for taking the time out and answering all our stock-specific questions. Thank you so much for joining us. We'll let you go on that note. But let's move on then. China is set to abolish VAT rebates on PV products from April 1st, which could allow players from other nations to be competitive, bringing Indian manufacturers like Vari Energies and Premier Energies into focus. My colleague Ashesha is now joining us with more details of the story.
Well, yes, all of these solar companies continue to remain in focus today. Something like Wari and Premier are gaining anywhere between 2 to 4 odd percent, and the reason is the latest announcement that came in from Beijing. In fact, they have ended their era of subsidizing transition to green energy. In fact, they've gone ahead and said that export tax rebates, especially on solar PV products, which was earlier in the range of 9 to 13%, will be completely cancelled with effect from the 1st of April 2026, which means earlier China was incentivizing export of solar PV modules and products to countries outside China, but this export incentive has now been abolished, which means Chinese products will not be as competitive and they will not be able to dump in the global market. Why this is a positive for Indian solar PV manufacturers is because India will now become competitive in the global market. China's advantage because of this export incentive will now come down, and that is precisely the reason this is a big positive for India's export oriented companies, and that is the reason both these companies continue to remain in focus today.
All right, thank you so much, Ashusha, for all those details. And with that, it's a wrap on Buy Now, Sell Now also. But then more update on the markets and corporate commentaries coming up in Markets at Noon after this break.